Lesson 17 Special Journal. A special journal is any accounting journal in the general journal that is used to record and post transactions of similar types. In other words, it's a place where similar transactions can be recorded and organized, so bookkeepers and accountants can keep track of different business activities. The most common special journals include the sales, cash receipts, purchases, and cash disbursements journals. All of these are used to record specific transactions and keep organized records outside of the general journal. In other words, this system is a way to categorize transactions into different types and groups. Types of special journal: sales journal, cash receipt journal, purchase journal, cash payment journal, and lastly the general journal. Sales journal. A sales journal is a specialized accounting journal used in an accounting system to keep track of the sales of items that customers have purchased on account by charging a receivable on the debit side of an accounts receivable account and crediting revenue on the credit side. The cash receipt journal. The cash receipts journal is a special journal designed to record a single type of frequently occurring transaction, in this case, cash receipts. This tutorial will cover the concept of the cash receipts journal from the original transactions through the posting process. Purchase journal. A purchases journal is a subsidiary level journal in which is stored information about purchasing transactions. This journal is most commonly found in a manual accounting system, where it is necessary to keep high-volume purchasing transactions from overwhelming the general ledger. The cash payment journal. The cash payments journal is a special journal designed to record a single type of frequently occurring transaction, in this case, cash payments. This tutorial covers the concept of the cash payments journal from the original transactions through the posting process. General journal. The general journal is the master journal that all company transactions or journal entries are recorded in. A typical general journal has at least 5 columns, one for the date, account titles, posting reference, debit, and credit columns, sundry credits, receipts of cash that arise from transactions other than collection of receivables are entered here. Example of such transactions are rent, commission, or interest received. Sundry debits, expenses and other accounts used in disbursing cash are written in this column. A subsidiary ledger is a group of similar accounts whose combined balances equal the balance in a specific general ledger account. The general ledger account that summarizes a subsidiary ledger's account balances is called a control account or master account. Accounts receivable. Subsidiary ledger. Customer subsidiary ledger includes a separate account for each customer who makes credit purchases. The combined balance of every account in this subsidiary ledger equals the balance of accounts receivable in the general ledger. Accounts payable. Subsidiary ledger show how much is the amount owed and the amount paid. Each supplier, creditor should be provided one subsidiary ledger each. Controlling accounts are general ledger accounts which show the summary of the information found in the subsidiary ledger. Read more about Lesson 15. Types of expense. Fixed expense or costs are those that do not fluctuate with changes in production level or sales volume. They include such expense as rent, insurance, dues and subscriptions, equipment leases, payments on loans, depreciation, management salary, and advertising. Variable costs are those that respond directly and proportionately to change in activity level or volume, such as raw materials, hourly production wages, sales commissions, inventory, packaging supplies, and shipping costs. The 2 ways of recording the expenses. Expense method is debited when payment is made. Asset method if expense is paid in advance before they are incurred. Accounting for freight. A business sells goods to a buyer with the terms FOB shipping point freight prepaid. Example. The value of the goods is $5,000 and the settlement terms are 2/10 N/30. The freight cost from the shipping point to the buyer's destination is $700. The seller prepays the freight expense. Title and control of goods passes to buyer when carrier signs for goods at the vendor's location. Carrier bills buyer directly. FOB destination, freight prepaid and allowed. The seller pays and bears the freight charges and owns the goods while they are in transit. Title passes at the buyer's location. The buyer pays for the freight costs, but deducts the cost from the supplier's invoice. FOB destination, freight prepaid and allowed. The
created using Powtoon.